My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. If a company is doing well and its stock price stops reflecting that, then sooner or later you get a relief rally, which is exactly what happened today, with the Dow gaining 312 points, S&P jumping 1.025%, and the NASDAQ surging 1.25%. But this kind of bounce mystifies people, especially after yesterday's ugliness. I mean, yes, why today? Why at these levels? What happened? Well, there are a couple reasons. And remember, I predicted this oversold bounce last night, but there are reasons to make it. It wasn't just all so-called technical. First, sell-offs won't stop until we've driven out the weak hands who can't take the pain of the market.
The house of pain.
At this point, we've driven out a lot of the disillusioned dip buyers went too low. So why don't we just use Cramer fave Nvidia as an example? This is a tremendous chip maker where no one believes there's a demand problem because they make the most important high-performance graphics cards imaginable. Nvidia stock has been pulled down by the overall market, especially the semiconductor ETFs. This stock has fallen from $224 to $196 in practically the blink of an eye. Even if Nvidia were a less than stellar company, which it most certainly is not, it would still be worth picking at these levels. We have a big position in Nvidia for the charitable trust, which, of course, you can find out by joining my investment club. And you know I'm quite proud of our ownership stake in Nvidia. And if the stock had been down again today, I would have fired off an email to you to do some buying. Could have been actually held back too long, perhaps. Should have recommended it yesterday before today's 3.6-point rebound. As I always tell club members, I don't always get it perfectly right. I held back because the market looked like it could keep breaking down. Of course, Nvidia can still reverse if the market starts selling off again. But even if the self returns, people now remember that this is the one of the stocks. This is the stock to buy after tech has been hit the hardest. They have great memory for this. When you have a straight line down of more than 10% in the stock of an amazing company like Nvidia, it's worth snaring some on the way down. It keeps going lower. Well, you know what? You can buy some more at better prices. So file this one under the great stocks that drop 10% are intrinsically interesting category. Hey, speaking of the semiconductor stocks, they're a true leadership group, and this leader is actually worth following. These days, chips are in everything that matters. They've been in a downturn for weeks, which is very unhealthy for the stock market. Great leadership group. Today's rebound is fantastic news for the bulls. We have a semiconductor shortage, of course. However, it's bad news for the myriad companies that need chips, especially the auto industry. But at least we're starting to hear some positive signs. I have my ear to the ground on this. That COVID's getting under control in the East Asian foundries, particularly Malaysia, that are so essential to the semiconductor supply chain. It is fantastic for Ford. Now, that's a long-time investment club holding, and one of that is because CEO Jim Farley is doing a great job of reinventing this once troubled company. We think Ford is such an important position for the club that we write about it regularly. You need to know more than just what I say on the show. Second reason for the bounce, we know inflation is running hot, and it's probably not about to stop anytime soon. But you know what? We just got results from PepsiCo that showed a monster 9% increase in organic sales growth. Now, I'm used to seeing 4 to 5% growth. That's extraordinary. The packaged food stocks have become toxic of late. I mean, look at the meltdown in McCormick after it reported similarly strong growth, but had to cut its earnings forecast because of these rising costs. So it's huge that PepsiCo could actually mount a bit of a rally. I mean, it was up $1, more than $1 most of the day, didn't finish over $1, even after management talked at length about inflationary pressures, and they made it very clear to you that inflation is a big issue. And that tells me Wall Street's really itching to get into this group, raw costs or not. Maybe they like the near 3% yield. Of course, PepsiCo is not the most represented food and beverage company. It's a best-of-breed operator. But it's still encouraging that the stock didn't slump. Even as, you know, when they reported at 6:01, they were already hammering it. But the selling was wrong. Maybe earnings season won't be that bad. Third, the big-cap tech stocks have been clubbed going in today. And as I'll explain later, the group was ready and able to mount a comeback. Some would say it was right for one. Now, this is an important move because just yesterday, once again, it drives me crazy. People were writing off FANG. Every time that happens, the doomsayers are proven wrong because these companies never stop innovating, which is why we own so many of them for the trust. While I think there's nothing to do with these levels, Wall Street made big pushes on Amazon, Netflix, and we got a relief rally in Facebook that we have to talk about more later. Other tech stocks with great quarters under their belts all shine. Think Adobe, ServiceNow, Workday, and investment club stalwart Salesforce.com. And that's good news because when they reported, their quarters were met with skepticism. I thought, by the way, that IBM acquitted itself really well on Mad Money last night, so we added to the bullpen of stocks that we're monitoring for the Travel Trust. That's a key feature. Sure, it's a slower-growing cloud play, but the growth will get much faster after IBM spins off its solid but going nowhere legacy business and the cash flow blooms. Fourth, we could rally even though oil went up again, because this time we also got very strong services purchasing managers index report. Last night, when we spoke to Marty Busey, the CEO of Paychex, he pointed out that business formation and hiring remain excellent. The states in the South that had the worst Delta variant outbreaks are now doing the best. The market loves a solid bounce off good economic data. Never forget that. Fifth, the bond market took its cue from that robust PMI number, which sent bond yields higher, stock prices lower. Of course, every time you get higher longer-term interest rates, the bank stocks tend to rally. But that rarely happens on days when oil goes up. Today was strong, was exceptional, was positive. Sixth, the reopening trade is still back on. The airlines are running, aided by the fact that they're forcing their employees to get vaccinated. Anything that makes people feel more secure traveling is great news. JetBlue just told us they expect transatlantic flights to resume by Thanksgiving. Now, that's some consumer spending is apparently flagging, some people say today. It's a much-needed development for the largest department stores that transatlantic flights come back. By the way, it's also good for terrible trust name Estee Lauder, come to think of it, EL. Okay, now, this is the one that I think is really tricky because I don't like these stocks, but I have to talk about them. Yeah, China rallied. Now, this is one of the most important factors that happened today. The Chinese stock market is the worst in the world. It hasn't been able to get any traction whatsoever because the Chinese Communist Party has started governing like they actually believe in communism. At the same time, there's a real estate crisis. But today we saw big gains in Alibaba, JD.com, Baidu, and a host of other Chinese names. Does that mean the government's war against capitalism has subsided for now? Could be. Certainly giving breathing room to the American companies with lots of businesses over there. And there I'm speaking about Nike and longtime Cramer fave Apple. You know what? I would actually nibble at Starbucks off this move, too. Of course, I hesitate to recommend any Chinese stocks on the show, even as they seem ripe for further bounce, because I don't want to wake up to the headline that the PRC is targeting yet another industry. One big caveat, though. This is strictly a snapback rally. It's hard for these moves to last because there's still so many investors who want to get out. If you get anywhere higher, they're going to hit the X's en masse, although as we get closer to the end of the month, I told you I will get more and more positive. Here's the bottom line. This was a decent bounce. You had a chance to get in ahead of it earlier in the day, but now that we've rebounded, I think you got to wait. No need to come in on top of what might turn out to be quicksand. Just keep your bat on your shoulder and wait for the next opportunity to buy some high-quality stocks at better prices than you ever thought you could get. Can I go to Frank in Pennsylvania? Frank!
Jimmy Chill! What's up, man? Hey, big shout-out to Levittown, Pennsylvania, where I'm calling from. First time on the show. Huge moment for you, big moment for me as well.
All right.
Jim, I'm watching the major indices. I'm watching these big mega-cap tech. Besides today, the last 2 weeks, just drilled to the center of the earth and losing tons of value, shedding market cap. And what do I see while that's happening? But a company by the name of Tesla trading above average value and outperforming the market every day. Today it was about average volume, and it was flat on the day. But, Jim, I got to tell you, I think it might be Tesla time. What do you think? Is it Tesla time?
I have thought it's Tesla time ever since a couple of years ago when it was, we've caught almost a 10-bagger. I am not leaving Tesla. As a matter of fact, I think Tesla is fantastic here, and it's growing and doing so in an incredible way, and Elon Musk is a true genius. Can we go to Pat in Massachusetts, please? Pat.
What's happening, Jim?
Not much. How about you?
I'm doing good. Fired up. Red Sox, Yanks tonight. I'm feeling good.
Yes. I wish you the best of luck. I know that Yankee fans here are not so happy about that, but I wish that a Boston fan good.
Garrett Cole's about to get rocked tonight. I have a funny feeling. So my question tonight is about the stock Square. Last week they made a big deal partnering up with TikTok. Yesterday, Square got gouged by dropping 12%, and then today went up 9%. How do you see Square as a long-term hold?
I'm glad you put it long term because I think it's a wonderful long term story. Short term things have gotten so rocky that I genuinely believe that it's going to be down 8, up 8, down 8 for a little bit. And it's going to shake out all the Johnny-come-latelys and the weak hands, and then it will be time to buy. Thank you for the kind words. Good luck to Boston. All three major indices had a nice bounce back today. I don't want you to jump all over it. I want you to take a step back and wait for another dip now that this one has occurred to buy some high-quality names at a discount. Oh, man, tonight, a short-selling report has put brakes on a company we had on air recently called Lightspeed. So after tumbling from its highs, what should you make of the point-of-sale software company? I'm going to give you my take. Then, looks like the market gave us an oversold bounce, right, that we talked about last night. So could this be a bottom or just a temporary relief to the pain? We have to do more than just what I did just now. We're going to go off the charts to find out. And energy companies seem to be taking a greater interest in, of all things, ESG. I'm learning more about how Enbridge wants to make a difference with the company's CEO and its 6% plus yield. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.